A very good afternoon to all of you that have joined us for this session on creativity with technology. This is a very current topic, especially when technology-enabled services have in recent years become a way of life. I was just reflecting the past week where I was stuck at home with COVID. I'm still stuck at home. And I practically lived online. I booked my PCR tests online, meetings were virtual. I got my COVID medication war chest from a digital service channel. Web check-in for my mom was going to Singapore, changed SGD for her, again, all done online. But more importantly, it was seamless. I could do all of that being stuck at home, and life went on, right? So in the face of consumers like me, who are now increasingly living online or digitally, businesses have to pivot with technology. I think most have realized that. And in the space of investing, consumer behaviors have changed, right? So we have more investors, especially youths, are getting information, especially investing information online. ICMR's recent survey on youth tells us so. More investors are also looking at opening investment accounts online, and more are increasingly doing so on digital platforms. Anecdotally, the robo-advisors that we've seen since 2019 have increased in number of accounts by leaps and bounds. Today, they've exceeded more than 600,000 accounts. It's testimony to how much investors are keen today on digital online services. The other third fact is that more investors too want to access their investment information digitally. In fact, FIMM's own 2021 investment management survey reflects that 9.2 million unit holders have access to online portals. Compared to a decade ago, that figure was only 300 plus thousand. So it's been a marked shift over the last decade and in particular recent years. So beyond the digitization of services or investment management services, the industry as a whole is also seeing further developments. It ranges from tokenization to AI-assisted investing to blockchain-enabled services. People are talking about decentralized finance and more. So what does all these developments mean to the Malaysian fund management industry? What are our challenges? What is the digital future for this industry? So here with me is a very distinguished panel of innovative industry leaders, which are going to talk about how the Malaysian fund management industry is evolving in technology. So we have with us, on my left, given I'm on the screen, Munirah Khairuddin, Country Head and Chief Executive Officer of Principal Asset Management Berhad. Munirah has been with Principal since 2006. She has been instrumental, not only in deepening the private retirement space, but in bringing innovative digital solutions to Malaysian investors. I'm a customer too that's benefited from it. Munirah also played an integral part in the strategic business development initiatives of CWA, an agency force of more than 8,000 unit trust consultants nationwide. And she oversees both the retail and corporate businesses for Singapore too. She was also named as the CEO of the Year for Malaysia in the Asia Asset Management 2015 Best of the Best Awards for the second year in a row. Munirah was also selected as one of the recipients of the Top 25 Women of Asset Management Award by Asian Investor in 2014. She currently sits on the Hong Kong board of Principal Investment and Retirement Services Limited and serves as an executive director of the Principal Islamic Asset Management with Berhad as well. She's also a council board member of the Institutional Investors Council Malaysia and board member of the Malaysian Association of Asset Management, where she was elected to the office as the secretary. With all these achievements, I don't know how she finds time to do things that she likes. So also with us, on my right, is Encik Mohamad Ridzuan Aziz, the Malaysia's country director and the head of ASEAN business for WorldRemit, a digital cross-border remittance business. Now, Encik Ridzuan has over 20 years of commercially driven regulatory, compliance, and technology experiences across Asia Pacific. Apart from his current leadership at WorldRemit, He is also on the board of CAF Investment Bank, ACRU, Robo-Advisory, Dear Time Intratech, and Ethics Global Ventures. He is a member of the Board of Advisors for the FinTech Association of Malaysia and was also the Secretary General for the ASEAN chapter of the Global Impact FinTech Forum. Encik Ridzuan is also an entrepreneur, having founded 2 regulatory technology or RegTech advisory firms, and was the CEO of Sedania Aslam Capital Sdn Berhad, a digital platform for Sharia compliance personal objective loan financing. So there you have it, 2 very credible and very established experts on our panel today. So without further ado, let's dive into the topic and hear what our experts have to say. So let's start off with a tough one, right? So I mentioned earlier about the benefits of technology and the potential that it brings to investors and industry. While many view some of this as progressive, there are also generally same views that technology is a disruptor. Some see simplifying customer experience and access as removing job functions, while others see it as augmenting their job functions. What are your views? Maybe we can have one Munirah first.
Thank you, Dr. Wong. Your introduction was very, very kind. But thank you for the the backdrop and for having me. Thank you, FIMM, for having me at this panel, a topic that I'm most passionate about. So to your question, right, I think all of the above is where we're at. Technology is something that we cannot live without. To your point, right? Suffering from COVID, and what would we do without technology? And I think it goes the same for investments as well, for now and for the future. I think I would view technology as an enhancer rather than an enhancer and a disruptor. So principal asset management, for example, we were a traditional asset manager, a traditional fund manager. But when we look at it, how else would we be able to reach out to now we have about 3 million customers? How else would we be able to reach out if it weren't for technology? So I think for a lot of companies, people are looking at it as an opportunity. If you don't disrupt yourself, someone else will. So you might as well disrupt yourself. So similar for the fund management industry, if we don't disrupt ourselves, we may not be relevant anymore. So that's my take, I think. Ridzuan.
Thank you. That's a very brilliant input from Munirah. Thank you, FIMM, for inviting me to this prestigious event. I'm sorry, a bit late. I thought we start later rather than earlier. But I'm here, and thank you, Dr. Wong, for the introduction. I agree with Munirah in terms of looking at it as a disruptor in one sense and as an enhancer in another sense. If you are sitting on a board of, say, for example, a traditional fund management company, and you are comfortable and do not want to change, of course you see it as a disruptor. But if you are sitting on a board that's progressive, or company that's hungry for more and really focus on creating values for your customers, definitely you will see technology as an enhancer. So I always see technology as a tool that would facilitate enhancement in certain key areas, particularly in terms of creating values for customers. Secondly, in terms of creating seamless and personalized experience. What Dr. Wong mentioned just now, she booked ticket, and that's really personal to the situation that she is in now. And it creates also capabilities for you to have efficient and effective business processes. Okay, and this is also, the third one is, I think rather very important, is technology would also create an opportunity for you to be able to collaborate with others in terms of not only organically enhance and enlarge your businesses, but also work together with others and actually better benefit ultimately for your consumer. So I'll stop there first and then let's discuss further later. Thank you.
Maybe I can add, Dr. Wong, right? Maybe if we look at it from a customer delivery to Encik Ridzuan's point, right? When we first embarked on this digital journey for our unit trust consultants, there was a lot of resistance. When we were trying to, as you know, some of you may know, we collaborated with Touch and Go Digital, and we're there in the app. And that, at the point where we started that, created a lot of uneasiness with our consultants. But where we found later on, it is actually a branding tool as well for them. So rather than taking it as inhibitor, it is a way for companies to also brand ourselves and also to get that across. Now, when we do digital fintech, it's a lot of heavy investments. Monetization of that, many haven't fully realized. But the truth is, if we don't spend and invest in this, we may not be around anymore. And that's the reality. So if I go down to a unit trust consultant who doesn't embrace technology may not be around anymore, right? So we need to embrace that. And so for us, what we did was, even in insurance, right? Most of the insurance providers, you already have this digital submissions and all that on your app and your iPads and all that. So we embarked on this as well. I'm happy to say that, for a traditional fund management company, the conversion rate today is more than 80%. And simply because once you are on board, you will realize that your productivity increases. Rather than you waste time filling out forms, you are now really giving advice, right? And all these digital tools will have your portfolio attribution, all that, right? You could do your webinars, you could do your market talk. And what we find is that our unit trust consultants are beginning to appreciate this a lot more because they are on the go. And that's the beauty of technology.
Yeah, I can't agree with you more. I do think that technology has helped in their own ways to help us free up our time, to value add, I suppose, to the process, versus spending time on activities that probably are lower in terms of value add. I think that definitely resonates with a lot of us. So speaking of adoption of technology within the industry, I think Munirah, you brought up a very good point around your company's own adoption of technology with unit trust consultants. In fact, I think ICMR back in 2019 did a survey, and it touched on digital priorities among asset managers in Malaysia. Now, most asset managers back then indicated the priority, one being digitizing middle and back office, followed by cybersecurity, and then front-end part of enhancing investors' interfaces. But that was all back then, pre-pandemic, 2019. And we all know things have changed so much ever since then, right? So in your opinion, where do you think the Malaysian fund management industry is with digitization or technology adoption?
I'm going to be quite cryptic and quite honest about this, right? So
cryptic and honest.
Cryptic and honest, if you can do both. And the thing is, when a company says they're embarking on a digital transformation, really what needs to happen first is the back end. So it's correct, the ICMR report was correct at that point. You do need to spend a significant amount of resource cleaning up your back end and ensuring that it's really, end-to-end digital. Because there's no point coming up with a front-end solution if you're not powered by your back end. So for us, transforming from a traditional company, it has been really painful, right? We needed to go, today we are almost 100%, I think 97% on cloud. This is to enable, easier integration to APIs. We're embarking on digital transfer agency, digital registry, and then, to connect that to a digital front end. It is very costly. So the truth is, I think for fund management companies, you really need to map out that transformation at least 3 years. If you're a new one, right, like a new robo-advisor and all that, maybe you're ahead of everyone else because, the advantage is you don't have baggage in the back end, right? But for many fund management companies today, you have a lot of customers that's on your traditional platform. Now we need to really clean up that back end, which for us has been painful, but I think alhamdulillah we are almost there, if not there, that will enable you to scale your front end. So a lot of digital companies would talk about, paying attention to customer journey, UI, UX, and stuff like that. You can't get a good UI, UX or customer journey if you don't transform that whole suite. So a short answer is, I think it's not easy for the fund management industry today. I think, many still need that financial help. But the good thing is, I think there's a lot of investors looking at Malaysia because of a high mobile penetration, high, growth in e-commerce, and usually what follows is fintech. And there's, I think, a lot of investors looking to invest in this space. So I'm hopeful, but the short answer is, it is not an easy journey.
Let me add to that. I mean, during the pandemic, when we built one of the robo-advisory companies, actually the growth rate was really unexpectedly well, because people were looking for source of income and ways for them to actually enhance whatever that they have as the way for them to make more return and creating more wealth. And the challenge, largely, whether you are new or whether you are an incumbent wealth management company, is mindset. You need to understand the mindset of your consumer. Who are you targeting? You need to understand the mindset of your board, whether are they really able to understand and formulate strategy for them to be able to waive this technology advantage. And then you would also need to re-educate some of your employees for them to understand that doing things in a digital environment is completely different from doing it prior to the pandemic. When you say you want to digitalize your businesses, it could be just either another IT project where you do business process automation, or in the way where Puan Munirah is doing it, is a really transformation of the business model itself. So doing those kind of stuff requires a cohesive mindset and understanding about the key stakeholders, understanding about what digitalization is all about. But in general, I think the direction of the wealth management industry in Malaysia is actually heading towards the right direction. It's about whether the speed is maybe different from one company to another, but I think everybody now starts to understand what it takes and what it is needed in terms of for them to take on this word digitalization. I think the largest fund management in the country also is doing some transformation. So that's why I think this is really encouraging, and I'm really hoping that everybody would take it in the way that that's relevant to them and really for the benefit of their respective customers. Yeah.
So where do you think, having said all that, Malaysia is vis-a-vis some of our neighboring ASEAN countries?
Well, when we talk about ASEAN, you need to understand that I think Malaysia and Singapore, based on my interaction with some of the fund managers as well as the aspiring people, some of the companies are looking for, is there any companies for us to buy? Actually, they want to actually get into the space, because with technology, a lot of things can be much cheaper in terms of how you want to run the business. A lot of things in terms of portfolio structuring and strategy actually could be automated. I would love to hear the question, could we replace a fund manager? That question, there's a truth in that, but there's also some challenges in that. But going back to ASEAN, I think, yes, for Malaysia and Singapore, it is actually possible, because both countries are different level as far as financial literacy as well as technology literacy is concerned. Compared to others like, I don't want to mention other countries that's in the bad light, but the level of literacy in other ASEAN countries are not similar to what Malaysia and Singapore has. Okay, and secondly, the policy that Malaysia and Singapore has is really facilitating towards for fund management industry players to actually collaborate with each other and collaborate with other types of financial services institutions. So and thirdly, these two countries has also the infrastructure for real-time or near real-time payments and financial services transaction actually to be facilitated. So these all combined created actually a cohesive digital ecosystem for the players in the country as well as for them actually to collaborate with international players. But what others are not doing, they don't have good literacy level. Their infrastructure is still struggling in terms of allowing co-opetition, what we call co-opetition. That means competition as well as collaboration at the same time. And their policy are not really facilitative towards digitalization as well as collaboration. So ASEAN, yes, it's happening, but really, really very focused in terms of if they have these three key ingredients, I think that larger collaboration can happen. But for now, I think it's only Malaysia and Singapore that's doing that very well.
Can I answer that question?
So in short, it is, how to say, we are there. We are well positioned.
We are on
it's
the
about
right,
us taking it forward.
yeah, on the right platform, but we can do better in many other areas as well.
Yeah. Yes, Munirah, you wanted to say something?
Yeah, can I answer that? So I think for ASEAN, because we're also in the ASEAN markets, to me, digital is, yes, there's a lot of regulatory collaboration, RegTech around that. But the truth is, as in with any distribution, it is about the local strategy. It's about being plugged into a local ecosystem. So if you're in Indonesia, you've got to be plugged into Indonesia's ecosystem, similar to Thailand, Singapore, Malaysia. It's a very localized ecosystem strategy. Now, I wanted to answer his question about whether he can replace me or he can't, right? and just to make the panel a bit more interesting, because many of you are probably very full from your lunch. And the short answer is he can. He can replace and he can't. Okay, so fund management can be replaced for very simple strategies. Okay, if you're designing a very simple robo, you know, you can basically do a bunch of ETFs, you can do a whole bunch of portfolio modeling, you can do all kinds of quant stuff, right? And that's the market you're after. However, I have seen many robos where you have a lot of quantum mental models, as such, all kinds of black shoals to it. But at the end of the day, in an emerging market in particular, or in a market where there's a lot of market dislocation, you still need a CIOI to come in and say, because some of the model assumptions could be wrong. So therefore, you can't totally replace fund management.
I agree.
And then secondly, which is relevant to this industry, is that it depends on the market segment that you're after. If you're after simple mass market, yes, you can go after very simple strategies that you can just go online and buy those strategies, right? But for the unit trust consultants in particular, this is where, you know, an advisor or a consultant value adds, okay? Because there are certain strategies that is not replicable in a simple digital portfolio, such as, I don't know, maybe in an emerging market, maybe in real estate, maybe in private equity. This requires very bespoke solution and different kind that you can't, well, there isn't a blockchain yet that can do that efficiently. So yes and no.
Just 2 minutes. I mean, maybe 2 seconds.
Go ahead, go ahead.
It's getting heated now.
Yeah, because
I can see we're passionate about this topic.
I agree with what Munirah is saying. Simpler customer segment, yes, you can automate a lot of stuff. Yep. Yeah. I remember back in maybe 26 or 27, this is in a relatively related industry in the capital market stock exchange. When you do active trading, when the direct market access was first introduced to Bursa, actually a lot of the remisers and the brokers actually were baffled because these are far more efficient strategy, yet simple, and it actually gives result compared to the human capabilities of waving through the markets and looking for values. So similar concept and principle, when you are doing simple and expected to serve simple segment, yes, this can be done. And in my opinion, it can be actually replacing those basic fund management function. But as you get more sophisticated and more complex, I think the best solution is for you to combine human as well as technology for you to get the best result, because machine could collect and analyze and do analytics almost on a real-time basis, and then human can decide based on experience whether these are something that is serving the purpose and the objective or whatever that they want to achieve from investment perspective. So yes, that's true. So that's why the cost of running a fund management company can be really reduced from a shareholder perspective, because if you take on relevant and the accurate technology for you to facilitate the CIOI job, then actually it is really beneficial and valuable for your consumer. But if you really want to maintain the same business model of having more than a few fund managers, I think that model cannot stay, because that is not sustainable and it is not effective and create lesser value for your consumer actually. Yeah.
I suppose both of you are basically trying to say that within the same Malaysian population, there are different pockets and segments of investors, and different investors have different needs, right? So for a spectrum of investors where it caters to larger volume of similar needs, technology could be a very good solution when it comes to providing easier access and cheaper access. And for segments of investors that want more sophisticated, more complex type solutions, combination of both technology as well as human behavioral insights and stuff would be very, very useful then, for humans to still be relevant to provide solutions, correct? So speaking of which, it dovetails very nicely then into my third question. Right? We talk about how technology can actually help with the agenda of investing business. The SC, in fact, has made this a core agenda in its Capital Market Master Plan 3 or CMP3, which was published in 2021. And the key objective is actually to see a diversified market, meaning something for everyone. So how do you think, or maybe if either Ridzuan or Munirah, you can elaborate how technology has actually enabled that inclusiveness agenda within the fund management industry?
Yeah, as mentioned, it needs to start with the literacy level being improved. That's really the key in terms of introducing new element into the investment management. In this case, people basically know investment is about putting in money and then expected certain return. But some of us may not understand that investment is only if you have spare money, then only you can invest. Never ever invest if you borrow money. That's one thing. That is really key. I think a lot of us knows that. But when it comes to investing using technology as a facilitator, these are different expectations that you should actually be looking for you to then get additional value from rather than just the return that you expect. One of things that you need to look at is in terms of seamlessness, ubiquitous, as well as simpler customer experience. So you do not want clunky, difficult approach in terms of how you want to invest, like how we did it before, where we need to fill in a lot of forms, we need to answer irrelevant questions, and we need to be in front of a person for us to do this. When you talk about inclusivity, the specific target market. And this is where now a lot of the companies are offering online eKYC for you to be able to do it at any point of time. And all you need to do is to download the app or go to the web for you to be able to be onboarded. And this onboarding process is actually approved by the regulators as well. Secondly, you need to also look for gamification that would actually facilitate your understanding about the investment that you are going to go in. So gamification is something that would give you not only the awareness, also the literacy or the knowledge about what you are investing in, including the risks that you're going to be exposed to, and your rights as investors. So all these need to be available on that digital platform for you to be convinced that this is something that you could enter and with confidence, and your rights are actually protected all the time. And last but not least, in terms of creating attractiveness as well as inclusivity, I think this is where most of the incumbent fund management company are trying to lure actually the younger generation to come in. Because the older generation, I'm not against the older generation, I'm also an old person already, but
Hardly.
but the younger generation actually, we did this survey, very, very simple question to the younger people. We asked them, would you buy a simple product like ASB and ESN and all those stuff? They said, if I have to go to their place, I wouldn't want to go there. Because what's the point? Although the return is probably very attractive, you can actually take loan for you to be able to earn quite a good return, but the experience for them to actually be part of that scheme is really unattractive. And this is where something that needs to be thought through in terms of combining in all these elements that I said, gamification, using seamless and ubiquitous experience, as well as appealing to the mindset of the target market. And that's where I think this is, it could actually create a really attractive proposition for inclusivity to be the key results that we want to achieve. Without this kind of understanding, it's going to be very difficult. And returns alone, I mean, sometimes this is where return that is too good to be true, that's more likely sound like a scam rather than just an attractive investment. Yeah. So I think these are the key elements in terms of how you want to create credible, sustainable, and I think workable kind of inclusivity program. Yeah.
It's interesting that you brought up a point around how investors now no longer just look at return, but also at the experience they get out of any investing, what you call platform or services, right? So that's a very interesting point that you have made. Because I think in the past, most of us are actually just focused on returns. And so many surveys have said, right? Munirah, you have done a lot in this space. Maybe you want to talk about your experience here?
Thank you. This is indeed a topic that I'm also very passionate about, which is, a core pillar in sustainability. So, you talk about ESGs, environment, social and governance. Often we don't talk enough under the S pillar. We tend to talk about, human capital, labor, etc. under the S pillar. But a large S pillar that's missing in our usual conversation is financial inclusivity. So recently, Principal, we launched this global financial inclusivity index. And we ranked all various factors, and we ranked all the countries. Malaysia actually ranked number 20 out of 50. However, within that, Malaysia actually ranked 5 in terms of accessibility between employers and employees, right? And I can't help but take the example of what EPF has done. Okay, so EPF, as we know, is the largest, for the private sector, for mandatory pension, and in the last few years, they launched this thing called EPF MIS, right? Where it's opening up to the whole population to come in and invest. If you have a certain excess above your minimum savings, depending on your age, you can invest outside of the EPF system into unit trust, right? I'm really happy to report this because when we did that, when we went onto this, it was also disrupting our unit trust agency because it's a big part of the unit trust agency business. But I'm happy to say today we are top in that space, and our agents, our consultants are on board there, right? And that is a simple example of how, when you disrupt yourself with technology, it can actually give you more. It can actually give you more. So we have today acquired more customers than we would have had we just gone on a human to human. So EPF MIS is a fantastic example. although the market cap is not as large as total unit trust market cap, but it gives a feel that actually this industry is ready and people are ready to come for digital advice. Second example I would quote is on our collaboration with Touch 'n Go Digital. So I mentioned how we partnered and, we are plugged into the ecosystem and we've acquired, we now have as a whole about 3 million customers, right? And actually when you study the data, it's all about data, right? So we study the data, actually the propensity to save, the propensity to invest is the highest among the groups 35 and below. They have the largest ticket size actually on our platform. And that shows this is, again, just, being inclusive digitally attracts people to save, okay? A second interesting factor is that if you look into when we put a proposition on this platform, on a TNGD e-wallet platform, the pitch was very simple. If you were to go outside to a bank, you need to be a preferred customer before you can even enjoy this kind of returns and this kind of easy, redemption. You don't need to have 250,000 to put in an FD. That is classic financial inclusivity, that we are democratizing the access to investment for anyone and everyone, as low as $10. So those are the kind of ideas, right? And I think many houses are looking into something like that, like spare change type of platforms and stuff like that. So this is, I'm really proud of the industry and how many, many companies have come on board to try and bring the whole population, because our savings rate, right, our GDP to savings has dropped. Yeah, and so I think we really need to boost this up, especially with the younger population.
Yeah, I think that's a very good point, especially as we talk about how most countries around the world, including Malaysia, is entering an age nation, right? Malaysia especially around 2030. Some say maybe sooner, right? The reality is we all have to start thinking about our retirement nest egg soon. And the question is, when do we start? I suppose everyone says that start earlier. Think about it, and such platforms or digital services where it makes it easier, cheaper, smaller ticket size for the average Joe on the street really does help in creating that mindset, and I guess encourages people on the street to think about investing little, sikit-sikit lama jadi bukit, right? So I suppose that really does help with inclusiveness across Malaysians. So we talked a lot about the benefits of what technology can do as far as democratizing investments. But whilst it allows new investors to the market, it also makes some investors vulnerable, right? So I think one of you highlighted earlier, senior investors perhaps who are maybe less familiar with technology, or investors that are less financially savvy or aware of how to detect scams, for example. So they inherently become more vulnerable as this whole digital journey takes place. And there's been many efforts across SC Bank Negara through FIMM network, even in the industry level, that there's so much more educational awareness on companies' websites to advise and all that. But what do you think, fund management industry can do more in actually bringing these vulnerable investors along the journey?
That's a difficult one, right? Because whether it's digital or human, sometimes human to human makes it even more vulnerable, because you get swayed by another human, right? And I think the role that we all need to play as a fund management industry is to dump it down, right? And there's no better way to dumb things down, so to speak, right? Because the average investors actually don't get what us in the financial industry are talking about, like all these, weird jargons. Only we understand. But the truth is, we're probably the dumber one, because we're not talking the language the majority of the population are talking. So I think the role that we play is to try to break it down. And then a concept in things that I've learned a lot actually in this whole digital journey, right? Whether it's an agile team, whether it's UI, UX, and that's exactly it, right? When you embark on this digital journey, the most important criteria is how you design that journey. So I think it's our responsibility to design a simple journey and assume everyone is vulnerable. When you design a journey to assume everyone is vulnerable, you will go through that steps of ensuring, okay, at every point, does the customer understand? Whether it's a 60-year-old or it's a 20-year-old or an 18-year-old, I think that journey is critical and it's in our responsibility. Our websites, and I'm probably guilty as well, are too complicated. Right? People don't understand what is it that you're trying to do. But with the advent of responsible social media, there is an opportunity, right, to bring it down to a level that consumers understand. If only TikToks would have a lot more education content than it does today, I think we'll go further. Not that I don't enjoy TikTok, but you know what I mean.
Yeah, I'll share with you what we have been doing and currently are enhancing in the digital remittance space. When I started the digital remittance company about 11 years ago, it wasn't here. It is in a different country. The key market that we were looking at was the Africa continent. So the Africa continent has a few challenges. One is language barrier. Secondly is we need to also teach them about the technology that needs to be used, because from where the money is being sent, normally people use smartphone, but when the money is received, people are still using analog phone or doesn't even have phone at all. So we broke it down into two categories, where if these are people who have challenges in terms of understanding the financial literacy aspect, we would always try to gamify it and make it simple and use influencers and social media platform, assuming that they have access to social media as well as using smartphone. But for those who doesn't have, we need to then have an extra effort in terms of creating program where you want to use offline to online approach in terms of actually getting access to them and giving the benefit to them. So you can imagine for investment management side, when you talk about the older generation, the key items that I actually have encountered is the preconceived idea that they have about what investment management is all about. They think that they know certain things. They have some misconception about what financial investment is all about. And introducing fintech actually is introducing two key problems to them. One is financial issue, one is technology issue. So it's easier to the younger generation because they are really tech savvy. They are tech, actually, they are tech. They are born with handphones sometime in their hands when they are born. So it's easier with the younger people. But with the older folks, I mean, it's a big challenge, but that's where the interesting part is. And last but not least, the approach to them, particularly the older generation, it has to be with dignity. You cannot be preaching them and they will just push you back. If you don't have enough white hair on your head, they will just push you back and just say, oh, you tak cukup makan garam, okay? I makan garam lebih banyak pada you. That's why you have the blood pressure and I don't have the blood pressure. So, but the point I'm trying to make is, with the older generation, you need to have really subtle, dignified approach, cannot be preaching, and hopefully you can use gamification, because I think the older generation also love TikTok as well.
But I think that's where the value for unit trust consultants, right? Unit trust consultants with digital tools like your portfolio management tools, you can advise, this older generation, and arguably they could be the more affluent one, right? Because they've got their entire life savings, for example. So there you go.
Yeah, I think that's a very good point, Munirah. I do think that vulnerable investors exist in both young and old generation. Different age groups will have different type of vulnerabilities, right? Even young investors these days can be quite vulnerable. They jump before they run, right? So making decisions based on information they see online without verifying it too, right? So that on its own is a different type of vulnerability. But I like the point that you've brought up in short, making things simple. I think that's a very, very powerful message. We recently did a workshop at ASEAN with some of the players around investing behavior or behavioral insights, right? And what you've just said about making things simple is one of the most fundamental things about getting more people to invest, making it simple. Right? Second, Ridzuan, you brought the point around educating people. I think that's very important, be it about using technology or be it understanding what to watch out for in scams, especially in the digital space. I think those are very, very relevant. In fact, on this particular topic, there's a question that's come up from the forum and it's been quite popular. So the question is, are we well prepared or well laggard in policing the advancement in technology for the better protection of investors' interests? Case of interest, Okta, FX, and the likes of it. I guess this question is really around the proliferation of digital services, and investors might not be able to differentiate what is licensed, not licensed. In other words, a lot of unlicensed activity going on. So in your opinion, is there something the industry can, what can the industry do, I suppose, in the respect of policing such cases from happening?
Well, my view on this personally is the information about what's licensed, what's regulated, which entity is actually allowed to do what kind of regulated services, it's all available already. And this is where I'm puzzled and sometimes surprised when people say, I don't know whether, I don't want to mention Okta effects, but whether that kind of companies are actually licensed or not. All you need to do is just go to the website, I mean, not to the website, to the World Wide Web and ask that direct question. Is this company licensed by BNM or SC? You will get the answer immediately. So the problem is people are so, I don't want to use bad terms, but not really keen to learn and go and read beyond the headlines. Because a lot of people now read the headlines and assume that the content is as per what the headline is saying. And if you look at YouTube or whatever social media or even printed media, you need to really read the fine print in terms of understanding what are the contents and most importantly, the perspective of what the information actually is trying to tell you and whether it's relevant or not to the context that you are looking for. So in searching for values and better return and whatnot, people are simply too greedy to look for what could give the best return, the biggest return at the quickest time, without really understanding what are their rights, what can they do, and who would protect them in case things go south. So all these informations are there. And second thing is we also need to use the right languages in terms of sharing this information, because some of these technical terms are hard to be explained in some other languages other than English. If you notice, okay, if you look at Maybank to you, there is no Malay version of Maybank to you. It's always in English. And you can see the customers of Maybank to you are not those that we are trying to serve. The customers of Maybank to you are more higher level literacy people and segment. And this is where when a lot of, some of the businesses that I've invested in and created, we always want to make sure that people who is going to use this would understand it in English as well as in the native language that they are using this, whatever solution that we are providing to them. I think language is also another thing. And we also need to make sure that, again, I'm emphasizing this, we need to do it with dignity for them to be able to trust you and make sure that, I agree with Munirah, that we need some human being behind this so that whenever they pick up the phone and say, where's my money, what happened to my money, there's a human voice behind that, not a chatbot saying that this is where your money is, or we are working on finding that information for you, for them to be able to have that trust level in using digital platform for them to be able to then be convinced that this is a better way to do whether investment management or whatever financial services is. Yeah.
This is a very, very crucial and important topic because in recent years there have been a proliferation of investment solutions that's not regulated. Could be an offshore platform. So I agree with Encik Ridzuan that it's actually very easy to find whether the companies and the solutions are registered by either Bank Negara or Securities Commission. Failure to do that due diligence yourself, who are you to blame? Because it is there, right? Now, a second point I want to emphasize is that for investors who don't understand, right, it's not just about getting a license by regulator. When you are regulated, you are subjected to the act and the guidelines prescribed in that regulation. Number one. Number two, you will have to have all those governance in place and that you are audited by the regulator. Principal is audited by the SC every single year. If you're audited by Securities Commission every single year because you are large, right, you better have things in place. And therefore that creates a lot of transparency and governance surrounding it. I think, together, industry and regulators, I know we are doing a lot of work trying to, look out even, to sniff out even, any platforms that are not legit, so to speak, or we notice a mis-selling to it. So I think it's important as an industry, even down to a unit trust consultant, when you do meet clients and you do see this kind of dubious or suspicious, it is Securities Commission is there. You need to report it and you can report it. So I think together, consumers with their rights, industry and regulators, actually the responsibility is on all of us to be a more responsible player and sniff out, right, when there is this kind of irregularity. It's everywhere in Facebook and Instagram and TikTok. So I think it's a matter of time that, I think the regulators will come and weed this out. But we can't wait for the regulators. We need to play an active role.
Thanks, Munirah. So as a regulator, I have to say we've been working with industry on what Munirah said. I think that there is a lot of effort in proactive surveillance and looking into cases that have been referred as far as unlicensed activities are concerned. But what I agree most is investors empowering themselves with that knowledge. I think that's fundamentally very, very important. Knowing where to go to identify which sites are unlicensed or potential fraudulent service providers. Those are basically step one in empowering oneself. Right? There is so much of this going on in the World Wide Web. To depend on surveillance and investigation would take time. I think investor empowerment is an equally important tool for the industry and regulators alike, and more importantly for yourselves, right, and your friends and families in combating fraudulent or unlicensed activities. Okay. So there is another question from the floor, which is really popular, and it's technology related. So it ties in one of the questions I wanted to ask. I spoke earlier of technology developments in the horizon, right? Things like tokenization, artificial intelligence-based investing, blockchain, or the decentralized finance even, right? So do you think development shaping the Malaysian fund management industry moving forward.
Okay, why don't you go first?
Okay. Okay. Those technologies, the blockchain, AI, DeFi, those are really interesting. I mean, including tokenization that you mentioned just now, in terms of how the direction of the fund management industry is going to be shaped. But most importantly is how relevant are those technology to the business model that you have or the business model that you want to have going forward. So this is where a lot of companies would not actually deep dive into all those technology if they do not actually have a proper understanding and alignment about what those technology actually could facilitate in terms of a future business model or the larger business model that they want to have going forward. So if you are an incumbent fund management company, I think to start thinking about tokenization or DeFi at this very moment, I think it's a bit premature because you, as what Munirah said rightly, you need to have the back end as well as the middle office that's ready for them to be able to embrace this kind of technology for it to be part of the business model itself. And those technology are what we call as a foundational technology. They are not actually going to be felt and actually seen by the customers, but what the customer would feel is the speed and the agility of the customer experience is going to be much better compared to how they dealt with a traditional or an incumbent fund management before. So like what Principal Asset Management has been doing is they embed themselves with TNG Digital, and that's not something that every single incumbent fund management company could do unless they are ready with the understanding about how this technology actually can be embedded. But if you go into a more sophisticated, say for example, if you have a family office as your customers, you may want to combine all those technology and create tokenization that is layered by a smart contract for you to be able to have a dynamic and a living contract so that the customer, in this case a family office, could actually benefit in terms of the changing parameters and mandate depending on whatever instrument that they're going to investing into. So all this technology would enable that depending on what kind of business model that you want to do. But I think, yes, these are the technology that will be very, very useful for you to shape a different kind of business model that you want to pivot going forward as an investment management company. Yeah.
I think that's a very good answer. I just want to add on, right? So artificial intelligence has also a lot to do with big data. So you really need to have a lot of data to come to a conclusion on a certain problem or a certain delivery. And I'll give you an example. So we're a global asset management company. We have started to use the use of big data and AI on our research. Because there are, when you look at global, there's a lot of global data points that can allow us to come to a certain conclusion. But if we were to do an AI on research in Malaysia, for example, we don't have enough data points. So it's all about, you know, that big data that you have and how much of an AI can you get out of that big data. On tokenization, I think it's a matter of time that it will come here. We're starting to see tokenization the same color as, you know, providing this democratization. So I know that in our neighboring countries, like, you know, they have like, say, a private equity or real estate, private equity or a bond, for example, that they want to democratize to smaller ticket sizes. Tokenization is beginning to take off. So I think it's a matter of time that that technology is going to be here. Blockchain is used, in our industry at least, is used very efficiently by large, say, global custodian banks, right? To automate certain processes, to kind of make things more efficient. So actually, the fund management industry is a very interesting one because the use of AI, tokenization, blockchain, can be applicable. Can be applicable. So the short answer is, yeah, we're all for it.
Yay! Very optimistic. For me, to my perspective, is that I think these are very interesting trends to watch for. We have seen use cases being piloted in different markets as far as tokenization is concerned, how it allow more fractionalization of assets, create more liquidity for lesser liquid assets. Those are all interesting developments that we're all watching very closely too. So I'm very excited to hear what Munirah has to say.
Yes, I'll be contacting you.
More conversations with Munirah after this on this topic. So I'm afraid that this is all the time we have for today. There are a couple of other questions that come in, but I think we've largely answered most of them throughout the conversation today. Before I close off this conversation, is there any last words from Ridzuan or Munirah on, say, the outlook of the industry in the next year or so? Is there anything you want to add before we close off?
Ladies first.
Ladies first. I think technology is already something everyone is embracing. The question is, where do we take technology, digital? How can we take that to the next level for the fund management companies, for the consumer base? And I think that lead-in is actually for the customer, which is first that we need to cater for. We will not be here if we don't cater for the technology and digital needs of the customer. So it's no longer about you're trying to introduce, a new product. Digital is hygiene. And digital, whether it's the front end, whether it's, the whole transformation of your back end, whether it's blockchain, whether it's AI, whether it's tokenization, whether it's financial inclusivity, all those topics are beginning to be very hygiene that all of us need to embrace. So for the unit trust consultants, I would say don't be afraid. Instead, use it to propel you to the next level, and all of us to the next level. Thank you for having me in this panel.
Thanks, Munirah. Ridzuan,
Yeah.
last words.
Yeah. Look at technology as a tool, and then make sure that find ways for us as a business to always be relevant. Whether you be using your brand as who spearhead actually development, or you'll be part of other brands. Being relevant doesn't mean that you need to be at the forefront all the time. So this is, I think, very, very important for the owner of the business to understand. And as a customer, always ask for the best value and don't just settle for returns. Ask for convenience, ask for transparency, ask for safety, and make sure that all these can be delivered, because nothing is impossible with technology. Thank you very much for having me.
Thank you. Thanks. So with that, I'm told that we've run out of time. It's been an interesting of everyone here, including the panelists. I thank all the audiences for their time. And until the next time, I suppose. Okay. Bye.
Bye-bye.